Good afternoon, everybody. Can you hear me all right? You should be able to see a screen that has all sorts of blue charts on it. If you are here for the time signal webinar, I can assure you, you are in the right place. All right. Thank you for coming here today. However you found us, I believe personally that you end up where you're supposed to be, and supposed to is a very metaphysical word, right? But I feel like things change when it's time for them to change. I think you find opportunities and learn new things when you're ready and open to learn them. And so that goes the other way too. When you're ready to teach things, those concepts find a way to float to the surface. And today I have the awesome privilege and responsibility of the latter and you the former to hear the things that I've learned over the last 15 years, about 5,000 customers now since 2009. However you found us via our social media channels on Facebook or X or TikTok or YouTube or Instagram, I just want to again say thank you. It means a lot to me that you're here today, and I take this very seriously. And you may get some messages from a handsome, suave gentleman named David. Dave Kern works with us here and helps onboard new customers. So we'll be learning a little bit more about that in a little bit. But if you have questions and you get a response in the chat from a guy named David, he's with us. He's not a Czechoslovakian hacker in a basement somewhere, 450 pounds in a lounge chair trying to get into your PayPal account. He's with us. So in a nutshell, many of you are here because you're missing that element of timing in your day-to-day trading, whether you're looking at executing in the futures markets, the minis, the micros, whether you're trading cryptocurrencies or foreign currency exchange trades, stocks, options, or all of the above. Timing is pretty critical. In fact, I would argue that unless you have a timing study, an indicator or a tool that helps you with your timing, you're not really trading, because price action is only reacting to things in real time or telling you what already happened in the past. And so we're the only company that I know of that does this really cool thing that I'm about to show you. Kind of gives you the times and directions in advance, tells you how we're going to trade it when we get there. And 2 days later, we analyze whether or not the estimates, the predictions, the behavioral forecasts made money, right? And so moving forward, a lot of people say, well, you know, if it's so easy, why isn't everybody doing it? And the reality is it's hard. What I'm showing you here, very few websites or marketing funnels will even attempt, because it requires thought. It requires preparation. It requires that it actually works. Imagine me telling you what markets we're going to do in the future, or the software through me telling you what to expect, and it actually happens. It's really hard to do that with free trials and phone calls from college students trying to get you to put $50 down and start that long road of another 50, another 100, another 1,000, another 5,000. We're not going to do that with you. I want you to see there's something really serious happening here. And so our process has been the same for 15 years. And over the course of 15 years, we've built up a pretty loyal following of customers and end users that have sort of left a trail of breadcrumbs for you to review and see. And I'm hoping by the end of today here that several of you will join up with us and experience the same things they've experienced. So what we do every week for the pilgrims is give them access to a web page. And that web page has the predicted times and directions for many of the markets that you were already trading: the E-mini S&P, oil futures, gold futures, the DAX, the Euro, the mini Dow, the NASDAQ, the Euro dollar, the pound dollar, Ethereum, right? And so when we look at these signals, the program is trying to communicate something to us. It's trying to tell us, in essence, if there's something ready to happen in the future. What times should I be trading? What directions should I be trading? So I want you to imagine, for example, that for the last 3 days in the E-mini S&P, the market goes up at 9:30, down at 10 o'clock, up at 9:30, down at 10 o'clock, up at 9:30, down at 10 o'clock. Imagine that it did this 3 times in a row. And Ken, when you woke up, the next day is a blank slate. Here we are, 9:28, 9:29, 9:29 and 59 seconds. Jordy, what might you be inclined to try, having seen this behavior happen 3 days in a row straight? What voice might emerge from the ether of the back of your mind? Might it sound like this, Graham? You know what? Let me throw a long on here with a small stop and see if it does what it did yesterday and the day before and the day before that. Ken, that might be something worth pursuing, right? This behavior pattern is repeating over and over and over again. And so most traders never think this way. Most traders wake up and think anything can happen. There's all sorts of news. There's all sorts of reports. All of that information is unknowable. Everybody learns it at the same time. The markets are fair and efficient, and the banks have access to it the same time as we do. And I'm not going to try that. And my customers say, you know what? Let me go long right here and see if it goes up again until 10 o'clock. So the program was warning us for the markets that I showed you 2 days in advance. And we can see that we have a way of going back now and validating whether or not what I'm about to show you was real. Before we do that, we're going to look at some higher time frame stuff like we do last week and continue to go back and see what was expected and what actually took place. So last week when you were meeting here in the webinar, I mentioned to you then and then the week before that the markets were going to stop going up on Monday, November 20th. If you've been following with me through the summer and beyond, I had told you, the software had told us that we were going to see an up move on July 6th. The markets were going to stop and go down on July 25th. The markets were going to stop and go up on August 21st and then go down on September 4th. We said that they were going to go down until September 21st and so on. And then we had this Middle Eastern war here, and the signal failed on October 17th. We were waiting for a drop on October 24th and then a rise on November 6th until November 20th. So here's an example of how the program on a daily time frame is telling us now through early spring of this year what days the market is likely to go up and go down. Now, interesting, I want you to look at this. If you're watching these markets in particular, you'll see that the market in the last several cases, if we just look at the from the signal forward, the market consolidated before it dropped in each of these cases here. And then you can see on the NASDAQ, there was a consolidation range about that big here. So in the last three cases for the NQ, when we got to a selling pressure signal, before there was a drop, the market consolidated in a box about this big. And so now on the NASDAQ, if behavior is any indication, the high right now is around 16,204, 16,205. It's a very high likelihood that we will come down and touch 15,813 and or 15,746 before a potential fall down. Okay, but if history is any indication, what has happened before is likely to happen again before December 13th. So I don't think the selling is over yet, especially since we haven't hit the bottom of the middle rectangle here, which represents the mean. If we come over and we take a look at NVIDIA, I post these images into about 15 different Facebook groups and warn people what's going to happen. And I warned people in the stocks and options groups that NVIDIA was going to rise again on November 6th, and that we were going to see a drop on November 20th. If you've come to these webinars or you'd like to go through the recordings, everything is archived. I have no way to hide from that, and I said it. And it's fascinating when you talk to people and you say, hey, the program warned us, the banks were getting ready to drop the prices, and it actually closed at 504 and now has fallen to 464. Straight off the close of that candle. Jordy, that's what you referred to as your climax candle, right? And lo and behold, look what happened. It's just a stop run, a liquidity event, luring the very last traders who think NVIDIA is going to the moon, $600 easily, and then they drop it like a rock. So that's expected to last now until December 11th. When you'd say, well, why do we care what it says out here? Why do we care about this signal? Because if we cared about the signal on the 6th, your calls would have went to 100% in a very short period of time. If we cared about the signal on the 17th, your puts would have gone into 30, 50, 75% immediately. If you had put some calls in here on the 21st, it went straight up. And if you put some puts on here on the 14th of September, it went down. So there's something deeper happening here just under the surface. The Wizard, it seems, if you've watched The Wizard of Oz or the Motown version of it called The Wiz, the Wizard seems to have his hands on the buttons and the dials. Either the banks are just getting caught up in this giant game of free will with the rest of us, or they want us to believe something is happening when the reality is they're getting ready to pull the carpet out from underneath us. If we look at SPY, we'll see that SPY is actually a little stronger than its ES or NQ equivalent. In fact, we're now in reaccumulation phase here in SPY. In fact, if we look at the range of SPY, we can get a sense from a Wyckofian perspective that this thing is gearing up for another push. So if we look at time signals in relation to market structure, we can make an estimate now in relation to what's happening with SPY as to what's next. So when we get to a selling pressure signal after a buying pressure signal and it goes sideways like this, Jordy, we have an anticipation that the closer and closer we get to this moment in the future, in this case, December 6th, which would be concurrent with this signal in the diagram, that people are starting to buy at the bottom, and people who bought down here are offloading some positions and taking profit. So on SPY, we're sort of seeing this reaccumulation. New buyers are coming in at the bottom. People are taking profit at the top. This is a bus stop. And it looks like the closer we get to September 6th, the more likely, October 6th, the more likely that move is willing to occur. And only programs like Warp can do this for us. If our worldview presupposes that time is the ultimate measurement, that trading is a guess as to what will happen in the future, if we're not studying time and thinking like this, we're sort of always playing catch up, and maybe we're lucky every once in a while. If we look at the NASDAQ here on a daily chart and zoom out, we can see that the last signal is doing the same thing as SPY. We came up from the 6th into the 20th, and now we are, if we look at the bodies of the candles themselves, we're ping-ponging in a very narrow range, right? And so as we get closer to, in this case, the 13th, the expectation is maybe a small drop, but more and more opportunities for a breakout. There's actually a concept, I don't have time to go into it here. Every time signal has a support and resistance level associated with it. And so every one of these horizontal white and blue lines, any customer can draw these on their chart. And I'm happy to go through that with you if you have questions about it. But you'll notice that the very last signal here on the 20th, David, can you see how that line drew off here to the right? That's the current resistance level of this signal from November 20th, and we haven't closed above it yet. We have not closed above it yet. There are actually 2 or 3 lines down here, and then there's an intersecting line right here. So the 3 levels at play in the NQ are 15,870, 1615, and then right up here, this chimichanga, 1686 area. There's actually 2 lines, 1676 and 1686.50. And until you see a candle close above those 2 lines, this reaccumulation phase is still in play. So we have an estimation of when this thing is likely to pop, right? The first or second week of December into the first of the year. So that's the NASDAQ right there. If we pull out and we look at Bitcoin, I'm going to load our template back up with the signals on it. We can take a quick analysis of that chart. The last signal, let me get rid of all my drawing tools here. The last signal on Bitcoin long was on October 26th until November 18th, and now the program is warning us the next puncture point here is December 6th. So on December 6th, we expect to see the same type of behavior that we saw happen on October 26th. So keep your powder dry until then. And for those of you that use my advanced technique, you can see here that there's actually the potential for Bitcoin to go down now until the 6th and then another pop up. Any questions about that? Okay. If we look at gold on a 1 hour time frame, gold has been steadily marching upwards. A lot of you asked which one of the signals are going to be the biggest moves, right? And one of the things that we've learned from the customers who are net profitable is that most of them, about 2/3 to 3/4 of them, are trend traders. And so in essence, what that means is they are watching for the times in the direction of the overall prevailing trend. And so coming up into the future here, you'll see with regards to gold on a 1 hour chart, we can see when the next signals are coming up into the future. And so when you're trading in the past, you can pay attention to the times which are likely to be long signals coming up. And we can see the white dots and lines here, December 3rd, December 5th, December 6th, December 7th, waiting for us to potentially be buyers in gold on a higher time frame. Coming out and looking at oil, how many of you were in my class this morning? How many of you were in my class this morning in the program? Yep. Okay. Do you remember, Earl, when I told you what oil was going to do today and how it was going to drop like a rock and at what time we were looking for that to happen? You see the 12 o'clock signal? Cool. And so we were waiting for that drop and we knew that it was going to fall. You'll see right here, Jordy, where I drew these red lines, these red arrows. We were waiting for a catastrophic drop today with the OPEC stuff, and we knew that that was going to stop right around 12 o'clock at the close of that candle. So oil on a 60-minute chart has been really, baseball has been very good to me. Very, very good to me. And then over on the 15-minute chart on the ES right here, we can see that signal at 12:15, pushing up now until 8 o'clock tonight Eastern time, and then in the early AM, 2:15 tonight in the Asian session, another push up, and then 4:45 in the London session. We're expecting more selling to occur. All right, so on the higher time frames, we can look at some pretty cool stuff. I just wanted you to know that before we look at the intraday programs, intraday signals rather, that we can look at the higher time frames. Whoops, I picked the wrong workspace. That's the one we want. Okay. So when we start to look at these signals, like the one on oil, for example, let's come over here and start to understand what the program said and what we saw, right? 936, 1006, 936. So Jordy, about 18,000 people had access to these signals right here. And I just want you to see, I'm going to draw a few things. 936, 936, 936. This has been published since Monday morning. 924, 924, 924. 830, 830, 830, 1006, 1006, 1006. And then 1118, 1118, 1118, 806, 806, 806. So one of the things this chart does that no other vendor can do, no other engineering company or trading tool company can do, is it establishes credibility, authority, and what's the word I'm looking for? it's telling people in the future what's likely to occur based on the premise of the software. That's scary. That's horrific, right? Accountability. It creates accountability. So if I've published this, I've made it available on the web page. People who are checking out the website are following along. And then the times that were published on Monday come up on the screen for Thursday. That's 4 days later. And 4 days later, we're seeing the moves that we're seeing on this chart. Holy cow. So I can't change things. I can't recalculate. I can't do all the stuff that gurus do when they try to get your hard-earned money, right? And now we sort of have this trading system that we're dealing with, right? If we look at the signals here, how might we have traded this? Well, I gave you the rules for the signals that we're going to employ right now. For example, we will be using how the signals can be traded by using one of two simple entry rules. And I leave a short link to a video, and I tell people that our stop is going to be 1.5 ATR values away. So when we get to 924, our stop is 1.5 average true range values away from the low of this candle, which has closed above the 120 EMA. If we get in at 924, we have to be out by 936. That is a 36 tick move. Now, the next signal is at 10:06. It goes immediately in our direction for $380 per tick. Let's assume you didn't get out or go to break even. Let's say it comes all the way here, and then Colin, this candle closes below the moving average. Let's say we give 35 ticks of that back because it's now closed below the MA. Well, we're now allowed to use the second rule in the video, which is called the puncture trade. As soon as this candle has closed below the moving average, we're now looking for essentially a stop and reverse signal, or a failure of the selling signal, of the buying signal. And so with this, I'm waiting for it to puncture through the white line, which is the second of the two setups that are taught in those videos I gave you. And right here on this candle, it starts to puncture through that white line. So there are two things happening per the setups I gave you on Monday. Number one, it's closed below the 120 EMA. Number two, it's starting to puncture below that white dot. And when it does, that's where we're going to enter short. So we're shorting here. Those of you who watch the videos and follow up on that stuff, this is called a puncture trade. Our stop goes 1 to 2 ticks above the candle which punctured the line. So as we enter that trade, we know what the risk is. It's 16 ticks. But what do we also know, Earl? We know how long that trade has to last. We know that when we enter here, we're going to hold the trade until 11:18. No other program tells us the time of the signal. And so now we're short from the puncture of that white line until 11:18. So that's $2,410 per contract. We then get to the next signal at 11:18, and it reaches a maximum favorable excursion of $1,130. Okay. So at this point, it starts to move back up. And in the rules that I publish, this is called a break-even trade. So in our bare bones signal setup, we actually walk away with 1 tick. The next signal comes, Bob, it's a 12:57. It's white. It hasn't punctured the line. And now I have permission to go short at 1 o'clock. At 1 o'clock, I know the direction, and I know how long I have before it goes out, At 133, there's another 21 ticks. Now, at 133, it punctures the white line, which means my stop is right here. Big risk on this trade. It comes down to a maximum favorable excursion of 22 ticks. However, we finish in the hole by 254, negative 27 ticks, or $270. Bob, all of the videos are located in the Customer Resource Center of the website. When you purchase the software on backtothefuturetrading.com, you'll see in the upper right-hand corner of the screen the Resource Center. When you log in, all of the training videos are available for you to go through and watch. Jordy, when we get to 254, what direction is the trend and what direction does the software tell us the signal is likely to go? The trend is down. The software is telling us it's likely to go down until when? Until 4 o'clock. We've had this information for how long? We've had the information since Monday. Fascinating. So we're going to enter at the close of the candle. We have a 1.5 ATR stop above us, and we get out at 4 o'clock. That's an $890 trade. And so now we look plus 36, plus 241, break even, but it was up $1,000, plus 21, plus 89, minus 27, minus 35. How are we doing this? How is that possible? We've had these times since Monday. There it was. There's the map. One of the reasons that this works is because institutionally, these guys are not on our side. There was a great article in Futures Industry Magazine. I preserved it here. No one is paying any attention to all of this electronic data. The banks at the time of this were publishing 55,000 messages per second. It's too much to keep track of if you're a human being. Elon Musk and Sam Altman are doing a great job trying to replace everybody with a computer. But in the meantime, you're sitting there trying to press the button. And the program, the indicator, is keeping track of that data. It's keeping track of the things that the banks are getting away with. There's only one institution in the world that makes money in a crisis when everyone else is losing their shirt. If you have a JP Morgan or a Deutsche Bank or a Goldman Sachs key fob that gets you in the building, you walk away with bonuses. In the Great Recession of 08 and 09, in the COVID recession of 2020, you get to buy other banks, little guys, regional banks that go under. You buy them for pennies on the dollar. Regina Gwynn writes, when Goldman and other banks upgrade the rating on the stock, watch the sale of institutional shares after that. When Goldman downgrades a stock, watch who buys. The large firms do not and never have had your best interests in heart. They hate you. They don't like you. They want your money. And so when people ask me, why does the software work and do what it does? It's because these guys had a plan in oil before it took place. Look at the pre-market. Look at the signals in the London and the Asian session. These are signals that I gave you. By the way, these are the signals from yesterday. I want to just make this point in oil. Who's meeting today? Who was meeting yesterday? Right? OPEC. These guys are saying we're gonna get rid of the production. Look at what these guys are doing. This is a pretty big deal, Earl, if you're trading oil, right? When were the times available for yesterday and today? Please say it to yourself. When did I give everyone in this room, everyone who's taken the trial, when did I give everyone the signals for oil? Monday. But that was before yesterday. That was before today. Well, these guys were going to meet in a room and make a decision. We didn't know what they were going to say in advance, didn't we? What did the program tell us was going to happen yesterday in oil during a meeting of the biggest oil producers in the world? Down at 9:45. That signals in the direction of the trend. The signal before that was a small loss, -8 ticks. If you shorted oil at 9:45 yesterday and you got out at 10:18, it was a $1,000 trade. If you took the puncture here, you got nailed and you gave $230 of it back. But Jordy, look, what percentage of the signals that were in the public domain did what was expected 2 days later? It's kind of freakish, isn't it? And again, just to make sure that I'm accountable to you, if we go back and look at what was published on Wednesday, we can download the webmaster archives and see when the signals were updated, right? And we can look and load that up. I'm just going to go through it. On Monday, you knew that 9:45 was a sell signal. You knew that 10:18 was the buy signal. You knew that 11:03 was the next signal here, and that 11:36 was the next signal up until 12:12. Time is the most important factor of all. You know who said that? A pretty important guy. In fact, he's one of my favorite guys. There were 3 people in the early 20th century who had a profound effect on every single person in this room. You don't know it. A lot of you don't realize it, but you owe much of what you do to one of these 3 people. Ralph Elliott, W.D. Gann, and Richard Wyckoff. Elliott, he had a pretty important perspective. He said, hey, markets are predictable if you only study structure. If you study the structure of the markets, you can tell what they're about to do in the future with a certainty never before attained. And this is where, if you're looking at double bottoms or double tops or trend lines, X to A to B, B to C, C to D, if you're looking at Gartley patterns and butterfly patterns, this is the guy who popularized that. Then you had this knucklehead, the editor of Ticker and Investment Digest. He's looking at what the volume is doing in relation to price action. If prices are rising and rising and the volume is getting thinner and thinner and smaller lots, it's probably going to reverse and go down. If the market is falling and the volume is increasing and increasing, you're sort of seeing the birth of VSA, volume spread analysis, market delta. If you use order flow analysis, you've got this guy to thank for it. And then there's this weirdo, a conservative, fundamental Christian from Lufkin, Texas, part of a large family, farming family, strong emphasis on education and reading. Gann believes everything you need to know to be profitable is in the Bible. And he starts to study cycles, time cycles. And he gets some money from his brother John, who's in New York and has a small business fortune to sort of lend Gann some money to spot him. And dude starts trading in front of everybody. He's trading cotton futures and wheat and corn and railroad stocks. And people are saying, whoa, 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 who's that guy? And he says, time is the most important factor, not structure, not volume. It's time. And so he gives us the secret formula. He tells us what he did. And no one to this day really believes what he said, even having seen him make the trades he made live in front of people, documented by witnesses that were paid to follow him and see what he did. When you hear him speak, he comes from the same part of Texas that George Bush, the son, came from. Remember, strategery, dead or alive. Same type of accent. I do a horrible East Texas accent. Time is the most important factor in determining market movements. And by studying the past records, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. Dead or alive. Strategery. That's the guy who first dips his toes into these waters, right? That's the first man over the wall. And so if we look at a market like the E-mini S&P on a 5-minute chart today, crazy day today, insane day today, how far off the mark were we? Did we have a reasonable expectation of when something was going to occur at 7:50? Did we have a reasonable expectation of what would happen at 9 o'clock and 10:30 and 12:45? Did we have a reasonable expectation of what was going to happen at 1:25 and 11:40? And Jordy at the open, we're off by about 10 minutes from that low. And it's happening right now at 4:35. This is the big one. That's what she said. This is the big market. Never. I'm never going to change. I thought I had hope. I have no hope. Yep. And it's not just today. It's been happening all night. The night before, it happened yesterday. Not 100% of the time, but boy, a lot of the time. A lot of the time yesterday. And then the European session yesterday. And the Asian session yesterday. Goldman was selling at 2 o'clock. Goldman was selling at midnight. Deutsche was buying at 1:15 and 3:05 and taking profit at 4:05. Citibank was buying at 4:50 and taking profit at 6:15, and JP said, let's push up again at 6:50. And they've been doing it day after day after day after day after day. This is just a record of malfeasance and shenanigans. And here's the best part. The times are ready for us for tomorrow. These times do not update, they do not change, they do not repaint, they do not calculate. They are here. They are immutable. Bob asks, is the 5-minute better than the 3, better than the 1? No. Let me rephrase the question. Bob, which time frame would a Fibonacci retracement work better on? Would a Fibonacci 50% retracement work better on a 5-minute or a 3-minute chart, or equally well? What's your first gut? You think a Fibonacci 5-minute chart would work better than a 3-minute? Well, no, it works the same on both. Time doesn't care what time frame you're looking at. So as you move higher, you go from a 5 to a 10. Did the accuracy of the signals change, or are there just fewer of them with longer moves in between? If I go from a 10 to a 15, the accuracy of the signals didn't change. There's just fewer signals with larger moves and bigger risk. The answer to your question is the better way to phrase your question is, which time frame should I trade? And unfortunately, that involves what a great man named Bob Vila called sweat equity. How many of you remember Bob Vila from this old house? My father watched every blank episode of This Old House, him and Norm, until the great breakup, and then launched the career of Tim Taylor and Al Norman from, what was the name of the show with Tim Taylor? I can hear the theme song in my head with Pamela Anderson, the Tool Girl, right? He called Tool Guy, Tim the Tool Guy. But the sweat equity involved with that, Jordy, is with Earl, is studying the markets and seeing what time frame you gravitate to. I love the NASDAQ on a 1-minute chart. Some of you wouldn't be caught dead in a room with the NASDAQ on a 1-minute chart. Some of you only trade 4-hour charts. You naturally evolve to the time frame that I believe you personally vibrate at. Our personalities are wired for different time frames. So some of you are down in the trenches scalping on a 1-minute time frame, right? And that's fine. Jordy asks a great question relating to time frames. If the hourly is up and the 5-minute is showing down, what do you do? Generally speaking, what I've learned from great men like Earl Schatzman is the trend is my friend. And what I tend to do is, Jordy, if I'm looking for a signal and I know that my risk is X, I want at a minimum to achieve 1.5 to 2.0 X. Does that make sense? And I'll have a break-even component. When I get to 1-to-1, I'll usually go to break-even in a trend direction. So if you have what I think you're referring to as dissonance, let's say the 60-minute is telling us up, but the 5-minute has a down signal, then what I would tend to do, or my advice to you based on what I've learned from great customers that have taught me, is we're not reaching so far, and now my target is here, and now my break even is half of that. So when there's dissonance between two things, if you're electing to use higher time frame confirmation, I want to be faster and I want to exercise more discretion in terms of risking grabbing the crumbs when they're available, because the move is likely to be smaller. I want to temper my expectations. That's probably a better way to say that. All right. That's a great question, though, by the way. And so when we're looking at these signals like that, we're sort of referencing things that people knew for a really long time before us. Humans are predictable. Did you know that you're predictable? Did you know that Verizon sells your location data, your geolocation data to people all over the world, when you're likely to be in a grocery store, when you're likely to be at a healthcare facility. One university or a private think tank group actually used cell phone records to determine what percentage of the population was having abortions and who was likely to experience a need for prenatal care. And so there was a really great study done a while ago. I haven't talked about it in a long time. Let me see if I can find it. Yes. Science Magazine had a great Science Illustrated. They did a study of humans, and what they noticed was the following. They took a bunch of people and they put them in a room, and they put cameras above the people in the room. And the computer made some predictions. They modeled what was likely to occur. Participants in an experiment in Cologne, Germany were asked to keep themselves in constant motion, but always remain close to people around them. They ultimately began to circle like a school of fish. So they were given two rules. Number one, you have to keep yourself moving. Number two, you have to stay close to people. And when they did, the computer predicted how they would move, and they started moving in a circle. They also predicted something else. When they asked 2% of people to spontaneously move out of the circle into the corner, the herd kept going. But when 5% of the people in the room were directed to walk into the corner, everybody followed them. It stands to reason then, Earl, that institutions, their algorithms know just how much volume it takes to convince you to take the breakout. They know just how far to drive through the low or the high to set that little piece of your evolutionarily determined brain on fire. Oh, it has to go higher. Look, it went 4 ticks above the high. Only to reverse and go in the other direction. Banks know this about you. This is proof. This is proof. And it's not just the US markets. Like, we can look at the E-mini Dow today. Look at the 2 o'clock signal this afternoon. There's no way we were going to know that it was going to go up that high. Oh, okay. In and out, 196 ticks. Was it just today in the Dow? They did the same thing yesterday. Jordy, look at the signal at 403. Whee! They are playing you. They're playing with you because they know something about you that you refuse to believe. Look at the German DAX today. Look at when the plans were to drive higher and lower in the DAX. Was it just today? No, it was yesterday too, and this morning. Look at what the plan was yesterday. I gave you these signals for the DAX yesterday. Everyone had them. If you're a customer, these are default values, 714 with a swing strength of 8. Every week I use the same thing. It appears that I know when the times are likely to occur and what direction they are likely to drag me in. So Jordy, right here on the DAX yesterday, this is the high. It is a double top. Oh, we didn't make it. And there's the breakout. The signal says to go short at 1051. Everyone is buying. There's the climax candle. And what does the move start to do? It starts to peter out and drop all the way back down. Stop, run. And they do it every day. They do it every day. And they're going to do it. Fun fact, These are the times for tomorrow. They're ready right now. They're ready right now. Sure, you can always add stuff to it. You can always look at it, right? Here's the euro US dollar on a 16-minute chart. There's the plan. It's already there. I show this to people for 15 years, and the overwhelming majority of people choose to not know. I don't want to know. I don't want to buy your program. I'd rather not know. Michael, I've already bought some software. Well, can I do this? No, but you dance with the devil that you know. Am I right? Am I right or am I right? Or am I right? Or am I right? Bitcoin. Bitcoin's random. No way to know. It's a free market. It's a rebel instrument. This is the people's currency, Earl. Okay, what happened at the plan? Mauricio, what happened at the Bitcoin signals? Stanley, Tom. Bitcoin's not tough to trade at all. No, it's tough to trade because of your worldview. What was supposed to happen at 7 a.m.? What was supposed to happen at 6:15? What was supposed to happen at 5 o'clock? What was supposed to happen at 3:30? What was supposed to happen at 2:05 and 10:35 and 10:55 and 2:05 and 4:05? Didn't work here. Okay. What was supposed to happen at 0:35 midnight? What was supposed to happen here and here? This one did not work. What was supposed to happen here and here and here? That seems to me a little more than 60% of the time. And here's the thing. These are the times in the future. And everyone here that's not a customer, statistically, 85% of you will leave tonight and not purchase the software. Even after I've proven to you, even after I've given you the signals in advance, even after I've shown you what's happened after the fact, even after we've gone through and added up all of the values, 85% of you, according to the stats from my website and the accountant and all that fun stuff, will say, no, I would rather do what I've been doing. And you're going to fail 500 more Apex evaluations. You're never going to get funded, and reinforce that self-sabotaging belief in the back of your brain that says you're never going to figure this out. I'll never understand that part. I can engineer this part, but I can't ever figure out that last part. Some of you are just walking in a circle in a room, and you'll never change. And about 5% of you, I can steer 5% of you away from the pack of losing traders, of subpar traders. And some of you go on to make $100,000, $200,000, $300,000, $400,000 a year or more. We had one customer who was averaging $2 to $3 million a year. Can't remember the guy's name. It's fascinating. Any questions about what I've shown you here so far? Any questions? Okay. At the end of it all, this is what I like to tell people. I am not Gann. I am not Wyckoff. I am not Elliott. But I've done something none of them have been able to do. With a Pentium 9 computer overclocked at 5.5, I have 128 gig of RAM, access to data on all the exchanges with a fiber optic connection, right? Gann did not have access to the things that I have access to. And when you have the opportunity to do what I do with the resources we all have access to, incredible things come out of it. And so I sort of stood on the shoulders of giants here today to bring all of us into a new epoch of sorts, because this is the reality of the markets today. I believe this with all of my heart. I know after 15 years that the number never changes. 5% of people make it through. 5% of you will make it. The other 95, it's a tough racket. And I see your posts on Facebook and I read the discords and it was this and that and some data feed and rhythmic. You blame everything but yourself. And here's the solution. Here it is. I told you I was going to turn the water into wine and then pour all the wine in the lake and walk on it. And I did. And you saw it. And some of you are still trying to figure out how I made the tiger disappear and how I'm going to screw you. Because every other vendor does. That's why it's important for me to show you the things I show you with Trustpilot and with those things we were looking at earlier. Trading is about the future. It's about time. It's about what's going to happen a second from now, 5 seconds from now, 5 minutes from now, 5 hours from now, 5 days from now. That's it. If you are not incorporating some type of time analysis into your study, then I don't know what you're doing. I don't know what you're doing. I come on the forums all the time, and I'm showing people these signals all the time, and I'm telling them when NVIDIA will drop. Mark has an interesting question, and I want to dig a little under the surface of that, Mark, because I think it bears fleshing out. It's fair to say then that the future predictions are not based of new AI technology, but more more historical patterns repeating themselves consistently over time. Mark, AI is a deep learning model, right? It's a learning model. It predicts what you're going to ask for next based on what you just asked for, right? It predicts what the answer to a question is based on studying the answer to that question 500,000 million times, right? AI is essentially telling you or giving you an answer based on all of the prior answers that came before. What is a squared plus b squared equal to? What does AI do? It goes out and it looks at every time someone's ever asked that question and what the answer is. Right? When is NVIDIA likely to go up again? How is this different than that? It's a learning model, right? When is NVIDIA likely to go up again in the future? Well, when has it gone up in the past? It's a pattern, it's a behavior pattern. A great way for me to exemplify this, Mark, would be to give you this example. I've given it a couple times. It's a little off color. I apologize in advance. I used to have a Bible study at my house, believe it or not. And there was a lovely couple there, Joel and Sandra. Joel worked at a hospital. He was administrator. Sandra worked at a no, she was a real estate agent, I think. And greatest couple in the world, super sweet. They were in their late 50s at the time that I knew them, which makes me really old now. And Joel actually he collected ancient artifacts. And I have, unless he was lying to me, a 2,000-year-old oil lamp downstairs made out of clay or whatever they're made out of. And it turns out Sandra had some suspicions, and she hired a private investigator. Stay with me. And what she found was that Joel came out of the hospital on average every day between 5:15 and 5:30. And 3 times a week, Joel would go to a hotel down the street, a La Quinta, Red Roof Inn, whatever it was. And he would check into that hotel next to another car, a nurse who worked at that same hospital. And 3 days a week, from 5:30 until 6:30, he was in this La Quinta doing God knows what with who knows who. And so Sandra had a behavior pattern. On these days of the week, there was a very high likelihood that Joel was not vertical between 5:30 and 6:30, or maybe he was, bless his soul. And so she decided she was going to confront him. And she arrived at the hotel 15 minutes before he was likely to get there. And she already had the photos to prove what he was doing because he got caught because of the historical behavior patterns. This chart is no different than that, Mark. Does that make sense? Humans are humans. Our humans are humans. We are predictable. We swim in circles like fish. We buy and sell in cycles. Time is the most important factor in determining market movements. AI, all AI is going to do is validate everything I've been showing you here because it's been working for 150 years, right? It's been working for 150 years, more or less. When is it going to stop working? When the sun is not the sun anymore and the moon is not the moon anymore and people are uploading their consciousness into Elon Musk's humanoid robot 100 million years from now when it finally works. Can't even get the Tesla Cybertruck to roll up a hill without rolling back down, but that's another story. Anyway, if you would like said information, if you would like to join the many people before you who sat in this webinar just like you and had the same experiences I'm hoping you'll have, there's a way to get the program. You're going to go to the product store. You're going to see the program here. This is the one everyone gets, TachEon Warp to start. I'm going to copy and paste that link into your GoToWebinar chat box. Great questions, by the way, today. Thank you for keeping it interesting. There's the link in your GoToWebinar chat box, and at the very bottom of it is a Buy Now button. When you click on it, there'll be a pop-up here. We have a live trading room that meets Tuesday, Wednesday, and Thursday from 8 o'clock to 12 o'clock every week. And if you would like to be a part of that room, it's, I believe, 25% off of the normal price, and it's only $149 a month extra. If you're the kind of person who wants to kind of see how other people trade it and kind of listen to someone who's been using it for a while, that may be a resource that you want to explore. If you're more of a loner trader, you got your own thing and you want to add this to what you're doing, just go to the checkout without it. After you click on and agree to the purchase agreement, there will be a place for a promo code, C, lowercase, CYBER, Charlie Yankee Baker Echo Radio, Charlie Yankee Baker Echo Radio Warp, W-A-R-P, Cyber Warp. Is this right? This can't be right. Is this right? Can't be right. Takes $1,000. Oh, this is Black Monday, Black Tuesday, Black Wednesday, Thursday, Friday, Cyber Monday, Cyber whatever day, Year of the Monkey. It's all in here. It's $1,000 off. This is the lowest price it is ever going to be this year, and you have to get it now. Don't call me next week and go, hey, I was watching the Bills game and I forgot to do the thing with the thing and the code. Can you reinstate that code for me? No. I barely want this promo code. I showed you one trade in oil today that was more than this, hypothetically. So if you would like this is an indicator for NinjaTrader. It comes with 2 computer licenses. It's lifetime updates. It has free installation. There is a video training archive available in perpetuity. This is a transferable license. If you want to leave it to your son in your will, knock yourself out. If you want to give it to your neighbor across the street when you make your first million, it is entirely transferable. You can do that if you want. If you ever change computers in the future, there's no, as of yet, maintenance fee or transfer fee. This is the last amount of money you'll have to spend. And so that is the way to get forward if you want to do that. There are other things available. There are plugins for Warp that let you do more back testing and analysis. We're working on, and we have a fully automated version of this that trades automatically. We'll be opening invitations to more people who want to participate in the Optimist program here in the next few days. And for those of you that want to really go down the rabbit hole and learn all that I know about timing signals, we can learn about force together. I've sent out some emails to some of you about force and how that works, how vibration and the law of vibration is sort of the ultimate incarnation of time. Let me know if you want to learn more about that in the future and become my next force student. I am happy to help you. I want to be part of your team. Oh, in addition to that, we have a Skype group that is meeting with each other and sharing their signals and opportunities with each other, their charts. People all over the world, new and old customers alike, are sharing their results and their histories with each other and taking their combines with Apex Trading and Top Step Trader together, sharing their settings with what works for them. And if you guys want to be part of that Skype group, simply let Rachel or me know, or Ron will add you to the Skype group as well. And there's a really wonderful community of users that we've built. Yes, it's Skype. I know it's not the latest, greatest flavor. It's kind of Al Gore-ish, right? But it's free. It's a way to communicate with each other and share what you're doing and what's working on the markets that you're trading. There's futures traders, forex traders, all sorts of people in here. So that's included with your purchase as well. So I tried to build a community for everybody here. We have people on our staff. There's myself, David, Ron, Rachel. We have Tim Flynn, Charlie, many of you have met, and wonderful customers like Earl and Pam and others that will come alongside, and Dorian as well, that will come alongside new traders and share what they've done to be successful. So I'd love to be part of your supporting cast and crew. I really thought this was a good image and communicates how hard it is to do what you do out there. Trading is not easy. and you need a team. It takes a village. You need people you can blow off steam to and ask questions to and ask advice for things as they pop up. And we're really good at that. Cyber Warp, CYBERWARP in Cincinnati. May the wind be at your back. May the sun shine upon your face. May the valleys rise up to meet you. And may the mountains lay low before you on your journey today. We wish you peace. We wish you health. We wish you good fortune and prosperity, profitable trades over time, fellowship and community, all that you have aspirations for. We are for you. We are on your side. I want all of those things for you, with you. I agree with you in that, and I believe in you. I know that you can do it. I've seen other people do it. I've seen people do it that I can't believe did it. I still can't believe it. And so I know that you can do it. I'm in your corner and on your side. So anything we can do to help. Dave's going to contact many of you, get in touch and find out what we need to do to help you come on board. And if you're going to walk away today, just know the statistics are not favorable. The people who leave here, when I follow up with them a month, a year later, they're not doing well. And you may have a problem. Maybe this isn't trading so much for you as a legalized form of gambling, in which case, just a quick announcement, service announcement, it's okay to stop. You can't lose money you're not trading with. And maybe for some of you, this isn't the path forward. Please consider, be careful, especially this time of year. People make some crazy decisions. I've seen families broken up, churches broken up, homes lost, bankruptcies. I know people who went to jail because of the markets and because of trading. It can get the best, all of you, if you're not careful. And so if you're in that place, you're feeling like that, just stop, take a break, put your account on hold, empty it out, put the money in a giant ice block in your freezer. Trading is not for everyone. But if it's for you, and you know in your soul and your core that you're ready, we're ready to help. Guys, have a great evening. I love you. Thank you for your support. If you're an existing customer, really, really appreciate you. We've got a lot of great things coming down the pike in terms of training opportunities, and keep your eyes open in the emails for your own promo codes for some of the stuff that you might not have from us yet. We'd love for you to balance out your collection with more of our tools. I love you. Be safe. Have a great night. We'll see you here next week. Take care.